When you retire, your regular paycheck retires with you, but you still need some consistent income to afford your expenses. Jim Lineweaver is here with a variety of options to increase that retirement income. Jim is a certified financial planner professional with the Lineweaver Financial Group. So welcome back to the show.
Thanks for having me.
Now, usually when we think of a regular income stream during retirement, that's oftentimes an annuity.
It can be. Annuities have really been promoted out there to help people through retirement. So they can be good accumulation vehicles, and depending on how they're structured, it may or may not suit you for your retirement income needs. But where some people get mixed up with annuities is that, let's say you have $500,000 in a fixed annuity, and it's paying you, say, 4 or 5%, and you're taking that as income. And that's fine. It may meet your needs today. But what a lot of people forget is in 10 years with inflation, is it still going to keep up with demand of buying cars and food and everything else that you need to do? So let's say you had $500,000 in the annuity. In 10 years, even at a 3% inflation rate, in 10 years, it'll only really be worth about $350,000 in purchasing power. So you just have to be careful how you structure that.
Okay, and so you have options other than annuities for steady income.
I do, because you don't want to put all your eggs in one basket. So one of the other options is you can buy dividend-producing stocks. And this is where you want to stick with good quality companies that are paying good dividends and have a good track record or history of paying. But you can get these on a monthly or quarterly basis. And the nice thing about that is over time, you know, as you get the dividends, a lot of times the companies increase their dividends over time. But also you have a little ability maybe for inflation over time if that underlying stock does well. Now you might be taking on more risk, so you always have to balance your risk reward, but it might be a way to get a good dividend and help stay ahead of inflation with the purchasing power over time.
Okie dokie. So another option you mentioned is a real estate investment trust.
Yes.
I hope we don't have to buy houses here.
No, you don't have to learn how to become a plumber and do all the fixing and all that kind of stuff. If you want to, you could, but otherwise, this is a passive approach to real estate. Because a lot of people think when they design a portfolio, people should have a little bit of real estate in there, whatever everybody's comfort level is. But this is a way, if you leave it to professionals, either through a publicly traded, say, stock or mutual fund, or maybe even a private real estate investment trust, if you qualify for your accredited investor, you can have the income that's generated off that. And sometimes it comes with a little tax break. There might be a little bit of depreciation that's normally passed through on that, but all real estate investment trusts are not created equally. So you really got to do your research to make sure your risk is matching your reward and what you're trying to accomplish on the income side.
Okay. One other option you mentioned is a bond ladder. What is that?
Yes, yeah. We don't have to get on the roof or anything like that. So, but it is laddering bonds, meaning that people are worried about bonds in a rising interest rate environment like we're in now. Matter of fact, in June, they may rise again. So what ends up happening is that you can ladder individual corporate bonds and buy them like one with a 1-year maturity and a 2-year and 3-year, 4-year, 5-year. And then what ends up happening is not only do you have income coming in off of all those bonds, but the one that's going to be out there maybe 2 years, then what can end up happening is then when that matures, just roll it into another 5-year bond. So you're going to then get, obviously, hopefully a higher interest rate for that bond at that time than you would be today. And it automatically rotates. You have steady income, and you'll take advantage of the rising interest rate environment. You will not be penalized for it.
Okay, good. You have one more income alternative.
I do. Now, this is if we catch people early enough. What ends up happening is certain life insurance provides an ability, if you overfund it, to get tax-deferred growth. And then if it's structured properly, you can actually get tax-free income out. So a lot of times you'll see this in the corporate executive world. You see it in the deferred comp world. And if people are healthy enough and catch them early enough to get some accumulation ability inside there, that can be another diversification tool as well.
Wow, good thing there's options for income.
There plenty are.
Thank you. These annuity income alternatives can have a positive impact on your retirement paydays. To learn more or for a no-obligation analysis of your retirement income, give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net.